The other day I made $16,000 trading fair value gaps. As most of you know, fair value gaps are one of the most powerful and easy to understand concepts in trading. But knowing when, where, and how to trade them is where the real money is made. In this video, I'm going to break down an A+ setup and show you how you can start using fair value gaps the right way. Also, if you want the full step-by-step process that I've used to help me make over $1 million, make sure you check out my simple trading framework PDF. I'll leave a link in the description. Now grab your notebooks and let's dive into the video. Okay, so we are in replay mode because I did take this trade on the 18th and 19th of July. So as you can see, this is on the dollar CAD. We've been trading in a really large range. So when we took out this liquidity down here, basically I was just waiting for additional information. This run right here wasn't enough for me to switch long. Yes, you could be trading this as a turtle soup, but the focus here is to be trading fair value gaps, right? And 80% of my trades are fair value gaps. I'm using all these different pieces for context, for narrative, but most of my trades are coming from fair value gaps. And what makes a fair value gap is we have a displacement, right? We have a 3-candle pattern, we have displacement, and there's no wicks that cover this body. All right, so this is one of the fair value gaps that I was looking at. And then once we broke to the upside, this is when I get an indication that the order flow is shifting bullishly. And this is really what I deem as change in state of delivery. And a lot of people talk about change in state of delivery. This is basically how I trade a change in the state of delivery, right? Because we had this sell side imbalance, and then buyers engulfed that level, right? Which invalidated this fair value gap. So if you're just a fair value gap trader, right, why would this fair value gap fail? Well, if you're trying to go short on this fair value gap, right, where is it resting? First of all, it's resting in a discount. So if we were to draw this high to this low, right, this fair value gap is resting below 50% of this range, which makes it a low probability fair value gap. All right, if it was a high probability fair value gap, you would want to see it resting at OTE or above 50% at least. And this is just something that you guys will understand over time, where a lot of these fair value gaps are left at either premium or discount of a specific dealing range. They are engineered ahead of time. So once we got this shift in delivery, right, we also had this buy side imbalance that overlapped with the sell side imbalance. So not only am I seeing sellers being invalidated, I'm also seeing an imbalance of buyers in this level as well, right, after taking out this liquidity. So this is the reason why this fair value gap would fail. We are in a discount. It's a low probability trade, and this is why not every fair value gap is going to be the same. Yes, it worked out here because we had equal lows here, and we needed to go flush out that level one last time. Right, so having an understanding of what fair value gaps are going to be high probability towards what draw on liquidity, right? So we need to have some context around the fair value gap that we're trading. We can't just put fair value gaps on our chart and expect to have a high strike rate or a high risk reward return as far as a long-term consistency. If you're strictly just trading fair value gaps without any context or without any plan in mind, then you're really going to struggle. What we need to see is we need to see high probabilistic reasons why a market should trade to specific draw on liquidity. So up here is going to be our draw on liquidity. I'll type it out for you guys. This is our daily draw on liquidity, right? And if we just measure, let's say if we wanted to have our risk is at the low end of this fair value gap, right? 42 pips to make roughly 56. But what we're going to do is we're actually going to come in here and dial in. So let's drop down into the lower time frames. So as you can see, this is Wednesday, and coming into Wednesday, I had a pretty good indication that this market was bullish based on the way that we reacted off of this daily fair value gap, right? So something that we have to pay attention to is, previous days lows and highs and how they're reacting around these levels that are overlaid, right? So we have this inverted daily fair value gap as well as this daily fair value gap in here. Not only that, but, this is our previous day's low. What else did we get in here? So we had another inverted fair value gap here. Okay, and I'll draw this out in time just so we can study it going into the following day, right? Because I did not take a trade on Wednesday, but based on this daily candle, right, I'm looking for setups the following day. And this is just me dialing down into the lower time frame. All right, so let's hit play and see what else we get. Okay, so this is a midnight open right here. My midnight dividers are off. Let me change this actually. Should be UTC -4. Midnight open. So you can see how during London session on Thursday, we've tapped this level. And what I'm kind of looking at is also a weekly profile where Monday, Tuesday, Wednesday, we've really been consolidating. Monday didn't really, I typically sit out on Mondays. So if I see Tuesday and Wednesday, we don't have any expansion, then later in the week, based on the calendar, which I'll drop right here. So if Tuesday and Wednesday are consolidating, I'm expecting Thursday to provide the expansion for the rest of the week. You can see that Tuesday core retail sales, right? We just had one big news candle, took out buy side liquidity, took out sell side liquidity, and then just fell back into the range. And then Wednesday, we had building permits and industrial production. And you can also see that, right? We've expanded away a little bit, but then collapsed back into a range. So really, this is just all consolidation. So coming up into Thursday we had unemployment claims at 8:30. I'm looking for that reasoning to see a late week expansion, and this is all based on fair value gaps, right? So this is our inverted fair value gap. We are still respecting this daily fair value gap, which I want you guys to pay attention to, right? And our drawn liquidity is up here, which was an old daily rejection block. All right, but all this framework is just based on the imbalances that are showing us where sellers are being invalidated and then buyers are stepping into the marketplace. All right, and this is how I'm using fair value gaps to my advantage. So once we have this tap down in this inverted fair value gap, I'm assuming that this level also is our order block and that we should not see lower prices, at least towards this consequent encroachment level on the daily time frame. So this is our consequent encroachment of that daily fair value gap. So really, if I'm trying to go long, right, I could place my long somewhere in here, and then my stop loss would probably be down here, just as a conservative approach, right? We could use some other level of stop loss in here, which we will get to in just a second. So as I play this market forward, my first position was on the 18th, right around 11 a.m. So I'm going to pause it right here, and this is where I enter the market, okay? So as you can see, my stop loss is going where the inverted fair value gap is, or where the London low is, all right? Because this is where my invalidation would be, just based on a shorter time frame. Because I'm not going to have a wide stop loss that comes all the way down here. Oops. I'm not going to use a wide stop loss that is coming all the way down here to this daily fair value gap, because it would, in fact, not make the risk reward favorable. So I'm going to use a lower time frame stop loss. All right. So based on us tapping into that inverted fair value gap, this is where I'm going long. Based on all this price action, right? We had displacement here, and then a nice retracement here. But again, this is all, you don't see anything else on my charts other than the fair value gaps, right? And something that I mentioned to my group as well is when I'm leaning one direction, I am not plotting really any bearish PD rays other than old highs and my draws on liquidity. Because when we get our bias right, we should see sell side imbalances fail. We should see old bearish order blocks fail and then turn to breakers, etc. So when I have a really strong trade idea in mind, I'm not drawing out all these other PD rays. Like I'll draw out this sell side imbalance right here, just so you guys can see how it reacts at that level. All right, so these are all fair value gaps. All right, but my main focus is on the bullish fair value gaps, because that's the way I'm leaning on the market based on this daily time frame. All right, so I placed 2 positions just so I could have the ability to possibly scale out if I needed to. So 2 rather large positions, just because I had a decent amount of profit floating in my prop account, which I'll share the dashboard towards the end of this video. But So I've placed my positions. Now we're gonna just really watch price action. All right, and none of this is really. You can see how we tapped into that fair value gap, and then we had a really big wick lower. We have to wait for our candle closures because that 1 hourly candle, and this is where experience will come into play. You really saw that 1 hourly candle come back down and really strongly. It looked really bad, right? And most people would puke the trade when they see that, based on this bearish PD array, which is our bearish fair value gap, right? But I have a drawn liquidity in mind where I have to be patient with my trades, and I have to understand that not every trade is going to go straight to my target. Like, trade markets don't move in a straight line all the time. So once we're in the trade, we have to be patient with the trade, okay? And we're just waiting for the specific draw. Yes, we can have protocols where we're going to take some partials off or move our stop losses. I am typically not moving my stop loss, though, until I'm at about 2R, okay? And this trade was really only about 2.3 to 1. So unless I'm able to reduce my stop loss and maybe scale in and add some other positions in, I'm typically not doing anything until I'm, further ahead in my P&L curve, just because I know that this is the daily fair value gap, okay? So I need to give the market some time to move around and breathe. And especially if you were entering the market back here, let's say if you entered the market after we broke the bullish fair value, the bearish fair value gap and inverted it. Let's say you just went long as soon as you entered it. Well, you have to sustain all of this sideways price action, and that requires a great deal of patience. Okay, so fair value gaps by themselves will not make you profitable. You have to learn patience. We have to learn discipline. You have to learn risk management, trade execution, etc., etc. All right, so let's keep playing forward on what this market's looking like. You see what I mean? So all of this is just, I'm okay with this market trading against me, all right? Because we do have another fair value gap in here, which I'll draw out. Okay, and then going into tomorrow, I'm actually looking at this fair value gap to add another position. Okay, so this is getting late in the day. This is already 10 p.m. at night, all right? And I'm still in this position. Coming into the next day, though, as we're moving away from this fair value gap, and as we get into New York session, what I did was I moved my stop loss up to break even. Okay, because we had this bullish fair value gap. And I added a scalp position, which we'll get to in just a second. All right, so right now it's about 6 a.m. And when I came to the charts, what I did was I adjusted my stop loss to break even. Right, based on this bullish fair value gap that was printed from the prior day. And what I'm looking for is a scalp position based on the news coming out at 8:30 a.m. So we have unemployment claims, and we still haven't reached that draw on liquidity up there. So we've also inverted this bearish fair value gap, as you can see. So I hope you guys see how I'm operating in the market based on us violating fair value gaps, creating new fair value gaps. I'm adjusting my stops accordingly. And let's dive into like a 5-minute time frame, because this is where I was able to position myself in a scalp 15 minutes after the news release. So the news release is at 8:30 a.m. and I was able to position myself in a long position just to capitalize a little bit more on this final push to my target. Okay, and then keep in mind that this is actually Friday. Okay, so I'm expecting to exit based on a specific time. Okay, so this was our news candle. So based on this fair value gap, right? We have another fair value gap here. After the news came out, so this is our news candle, about 10 minutes after the news came out, I'm looking to go long again, just for that final push up into our target. And this is where my target was hit. All right. based on time of day. And if you look at time of day, it's right around 9:20. And on a Friday, usually that's where the market will be capped. So you can see after we ran out the rejection block, there was a really large retracement. And this is where your time of day exits will play a really important role in your trading as well, because as you can see, we didn't take out this old high back here. And I'm not greedy where I'm expecting those old highs to be ran out. Okay, I'm just aiming for the low hanging fruit, because if I didn't exit based on that rejection block, right, this market would have came back on me. Okay, so as you can see, we get deeper and deeper into the final day, or into the final few minutes of the day, leading up into the London close. All right, guys, so we're gonna just quickly run through the Alpha Capital dashboard, just so you guys can see that I actually took these trades that I reviewed in this video. You can see coming into the dollar CAD trade, I had a decent buffer on my account balance, so I believe I was sitting about $15,000 before I made the trade on dollar CAD, which kind of put me up to, I believe, 230K. And then this week I kind of gave a little bit back. So my withdrawal is next week. So currently I am sitting at $23,000 and I'm going to withdraw all of it. So it equates roughly to a 12% gain, a little bit shy of 12%. So you guys can see here that, you know, these are my CAD entries and exits, equating to about $16,000. I hope you guys enjoyed this video and can see how fair value gaps can be extremely useful in determining order flow and trade execution. Now, if you watch these videos but still struggle with trading, I've just launched my apprenticeship program and I've helped students like Jim, Fernando, and Fit get on the path of consistent profitability. So if you're interested in learning directly with a trader who has over 10 years of experience and has made over $1 million from prop firms, go ahead and apply using the link in the description. Also, don't forget to like, comment, and subscribe, and I'll see you guys in the next video.